Eric. Welcome to the Made for This podcast. I'm so excited that you're here. Thank you so much for taking the time to come out this early morning. Today's episode, we're going to be talking about the myths of buying a home. I specifically want to have this conversation directed towards people my age or
hmm
people that have just not bought a house yet and are not necessarily educated. But before we dive into that, I'd love to give you the opportunity to introduce yourself. Tell us why you got started in this industry, what's your favorite parts about it, a little personal facts about yourself, whatever you want.
Awesome. Well, thank you. Thank you so much for having me. So, Eric Rosberg, mortgage broker with U Mortgage. I'm a branch manager
Yes.
here in Jupiter, Florida, just down the street. Uh, I love real estate. I love I love being able to serve people with solutions, and that's solutions and really impacting their lives because there's no greater way to impact yourself financially, just your whole future, other than home ownership.
Yeah.
So it's very rewarding.
Yeah.
It's exciting.
Well,
So
that's the best.
that's why I got
You're
into it.
truly the best. There's this fun little question that I wanted to ask you. If you could describe your kind of way of working with your clients in one word, or your passion for your career, whatever. If you could describe your career and how you love it in one word, what would it be?
So one word for working with home buyers or potential home
Yeah.
buyers is clarity. I think that would be the one word I would describe because there's a lot of confusion.
Yeah.
There's a lot of unknown. There's a lot of fear, and they have their destination. Like we want to become homeowners,
Hmm.
but a goal without a path
Hmm.
is just a dream.
Yeah.
And when we can create a roadmap
Hmm.
and clarity and how to get there, it gets them to that
For
destination.
sure. No, that's a really good word. It's, for me too, like as a realtor, working with people, clarity is definitely the number one thing that they need to get them to the end goal. Um, what's your favorite thing about working with first-time home buyers?
Oh, first time home buyers, so
Yeah.
much fun. It's an emotional roller coaster. It's a huge purchase.
Yeah.
Number one, it is life changing. This changes me doing someone's mortgage, helping somebody doesn't. I don't want to say she doesn't change my life.
Hmm.
It does because like it fills me up emotionally. There's the financial component to it, but
Yeah.
more importantly, it changes people's lives.
For sure.
Like it is, and just getting the keys. I was with Alex, and we had some first-time home buyers this week, and we're
Yeah.
at the closing table, and just the level of excitement.
Yeah.
And that's just when the journey begins. Like their journey
Hmm.
is just starting. They're young. They're starting a family, um, and staying in touch
Yeah.
down the road.
Yeah. Building those relationships. No, first-time home buyers, it's so exciting being a part of that process and seeing them start their actual
Mhm.
life in their first home. It's so exciting. Congratulations about you and Alex, by the way. I haven't been able to say that,
Well,
but
thank
you're closing with that. So let's jump right in. We're going to start with probably the biggest topic. Again, we were talking outside about, for those of you who are listening and don't know me very well, I am 23 years old. I'm a realtor, and I am surrounded by people in that specific age range that are constantly talking about how buying a house is completely unrealistic at this age or even in the near future. Um, and I really wanted to have you here because you're the best to explain, some of these things that are stereotypes that people think about buying your first home, but a lot of it's not true. So
you.
um, let's start talking about the topic of 20% down. That you need 20% down to buy your first house.
It's it's a big myth.
Yeah,
I'm not going to name names, but
yeah,
there's some pretty big podcasters out
yeah,
there who say you have to put down 20% because it's the fine. You don't want to pay mortgage insurance.
yeah.
Um, I talk to a lot of real estate agents who say, "Oh, we can't do a conventional loan because they have to put down 20%." And you don't. Bridget, my wife,
Yeah.
we bought our current house in 2024.
Hmm.
We did it with 3%. 20% down.
Yeah,
We had the seller cover all the closing costs.
that's
So
amazing.
you can do conventional loans, just to spit some facts.
Hmm.
Conventional loan if you're a first time home buyer. And that just means first time home buyer just means you haven't owned in 3 years.
Yep.
36 months, you could have owned 100 houses, taken a break, gone and toured Europe for 3 years, come
Hmm.
back. You're technically a first time home
Isn't
buyer.
that crazy?
It's a lot.
That's insane. That's, I mean, I hope whoever's listening, that sticks in your head. That's
So
insane.
and even if you're not a first time home buyer, you can still qualify for an FHA,
Hmm.
which is 3.5% down, or conventional is 5% down.
Hmm.
Or my absolute favorite people to work with are veterans
Yep.
and active military. And with a
Hmm.
VA loan, you can finance 100% of the home value. We don't see it so much in this area, but there's also another loan that's called a USDA. That's rural,
Hmm.
back where I'm from in Vermont.
Yeah.
Like there's areas, but that's the same as a VA.
Mhm.
So it's 100% financing.
That's awesome.
But that myth, the 20% down,
Yeah.
because that's can be very unattainable to put.
Extreme.
By the time you've saved 20% down,
Yeah.
how much have you spent in rent? How
Yeah.
much have you just,
I know.
and then we see the prices go up. So that 20%, that target keeps getting bigger
Mhm.
and bigger.
Yeah. I was just actually with a family member last week, and he's older. He's probably in his 70s. But we were talking, he knows I want to buy
Mhm.
a house here soon. And he was like, it's so hard for these young kids nowadays. 20%. Like just in his head, it must have been something like back then where that was the thing that you had to do. But he was like, that's a lot of money to save up in my head. And I even said, I was like, no, 5 or 5. Like it's not that
And
much.
I forget the year. I don't know the exact date, but
Yeah.
there used to be, you used to have to put down
Yeah, yeah.
20%.
Yeah, I assumed because everybody's mindset is at that
Mhm.
20%. And I swear to you, like a lot of people that I work with, and I don't know how often you hear this, but I'm surrounded by people, again, my
Mhm.
age, that are only think this and are thinking that home buying is completely out of their realm. Like
Mhm.
it's very sad. And so I was excited today to actually specifically really talk about that, like the importance of like you really only need 3.5% down or the 5% down. And what people don't realize is like probably half the people that are going to be listening to this have that money already in their bank. Like it's not a ton of money.
Well, you work with rentals
Yeah.
as well, right?
Hmm.
When someone goes to rent, it's first month, last
Last
month,
down payment.
security, pets.
Yeah.
There's it that
It's a
adds
lot of
up.
money. I know half the renters that I work with, every single time it's time to make that
Mhm.
deposit, it's a one-time wire deposit. You're like, this is literally a down payment on a house.
Absolutely.
And I see that kind of twitch in their eye. They're like, this, I don't think they realize how much it is until they actually
Until
make
you're
that wire.
right.
But they're like, this is a lot of money just to live in somebody else's home. So
To pay someone else's mortgage.
exactly,
It's
exactly. So that is extremely important to talk about. You do not need 20% down, 3.5 or 5% for conventional
or three.
or
Three,
three.
three, 3% if you're a first time home buyer,
There you go.
conventional.
What is let me ask you this. Do you recommend a specific type of loan to like conventional versus FHA for first time?
Awesome question. Awesome question. And the answer is it depends.
Yeah.
So technically, I look at myself as an advisor.
Hmm.
So it's going to depend on a few different things. Credit score is going to come into play.
Hmm.
FHA is more flexible on some of the lower credit scores,
Hmm.
where a conventional loan will go down to, if you have a 620 credit score, you
Hmm.
can do a conventional loan. However, now when we look at interest rates and mortgage insurance,
Hmm.
it may not be the best fit. FHA loans are also more flexibility. They have more flexibility with something called debt to income,
Yeah.
so you can carry a little bit more debt.
Hmm.
So it's situational,
Yeah.
um, and sometimes I have people who are right in the middle,
Hmm.
and we'll go and I'll show them side by side. Here's the pros, here's the cons, to that.
Yeah. Are there specific programs or grants that you recommend first-time home buyers in Florida?
In Florida,
Yeah,
that's a great question.
yeah,
So we saw a lot of hometown heroes
yeah, yeah,
advertise. I'm going to shoot straight. I'm going to
yeah.
shoot straight. I'm
Shoot it
not a
straight.
huge fan of the hometown hero,
Yeah,
especially in the current market
yeah.
where I personally am seeing a lot of home buyers getting seller credits to
Hmm.
cover closing costs. Um, because that particular program, it's if that's the only way to get in, absolutely, that's the only way to become a homeowner. But it's not free money.
Yeah,
Meaning, if you refinance, if you sell the home, you do have to pay it back.
yep.
So it all comes down to the one of the first questions I ask any buyer, first time home buyer,
Hmm.
investor, what are your goals? And we start talking about their life goals, like personal, do they travel? How long do they plan on keeping the property?
Hmm.
Um, because a lot of like that for that hometown heroes, if they're only planning to live there for 2 years or 3 years, think about an active military
Yeah,
member, and they're like, hey, we know we're going to PCS, permanent change of station, in 3 years, or it's a high probability they could be handcuffed a little bit,
hmm,
having to. Who knows what the market's going to do
yeah,
in 3 years? But there are other grant programs. There's other down payment assistance. Those are kind
hmm,
of case by case.
yeah,
So there's not really one size fits all program, but there's a lot. There's a
yeah,
lot out there.
yeah.
There's
And so you are, I know that you've worked with one of my best friends, Julia,
yes,
and she has told me how great you have been and that you have basically, like when you guys first started working together, you told her, educated her on every program there was, you sent her all these different things. So really, you have the opportunity to just kind of shop around for what's available right now and send to that home buyer and they get to go from there. So
absolutely,
that's,
and she's a perfect example.
yeah,
It's similar age,
yeah,
first time home buyer.
yeah,
They didn't think they were ready.
I know.
They didn't. That was eye opening to them, where
Yeah,
they were like, yeah,
you could do it.
you can buy right, they could buy right now,
Yeah,
and I love the fact that they started the plan,
yeah.
that they didn't wait,
Hmm.
um, and we dialed in a couple like couple little things, couple little credit things. Everything was they literally they said, hey, we want to buy it tomorrow. They could have
They
done
could
it.
have.
And they thought they were a year out.
Yeah,
They
I
thought they
know.
were a year out,
I
and they're
know.
they're, they're still looking.
I know.
They're still
It's
looking.
coming soon, though.
Yeah.
It's coming soon. Let's talk about the importance of, let's word it this way. When it comes to pre-approval and buying a house, what's more important when qualifying for a house rather than the other than the down payment? Like, what comes of importance other than the down payment, and what is more important than the down payment, if there is
I don't
anything?
want to say one is more important
Yeah.
than the other. We look at income,
Hmm.
how much money they make, how
Yeah.
much we can qualify them for. So there's different income sources.
Hmm.
Someone can be self-employed,
Yep.
which can be an LLC, it can be an S corp, they can be
Hmm.
paid on a 1099, or they could be a W-2,
Yeah.
meaning they're paid hourly, they're paid salary. So there's a whole equation that goes into how are we qualifying them with their income. So
Hmm.
income is one component. Liabilities kind of incorporates credit.
Hmm.
I talk to a lot of people who say, "Well, I have an 800 credit score. I should be able to buy a home."
Yeah.
Well, prove
That's okay.
if we can't prove income,
Mhm.
or there's no way to do a down payment, or there's no down payment assistance that they
Hmm.
qualify for, um, there's not one that's more important. But
Yeah.
that's the pillars: income, assets, and assets can come in a gift. We didn't talk about gift money. I see
Hmm.
a lot of first-time home
For
buyers
sure.
getting a gift
Yeah.
from a family member,
Hmm.
um, and then the credit, because credit score does play into, all right, we have income,
Yeah.
we have money down. Now, which loan product can be the credit score and also debts.
Hmm.
Like how much do you owe?
Yeah, for sure. That's what we're going to get into next.
Yes.
What is a realistic credit score for that first time home buyer looking to buy their first house?
What's an ideal or what's
What's I want to talk about, like, because we are young.
Mhm.
Most people don't have tons of lines of credit. They have a few credit cards. They maybe have a car loan or something like that. I mean, me personally, I don't have tons and tons of
Mhm.
credit. So what can you work with? What is I want to know what you can work with and what is perfect.
Gotcha.
Like, just
So
tell me
let's
everything.
start. We'll start at one end of the scale. You can qualify with as low as a 500 credit score.
Yep.
Up to 580, you need 10% down.
Okay.
So 500 to 580, and
Mhm.
then there's some other puzzle pieces that have to fit
Yeah.
for that credit range.
Okay.
580 and above, and I'll show people up to 720 credit score. I'll still
Hmm.
show them FHA,
Hmm.
and ideally you want to be high sixes. Ideally, like perfect credit score. Now let's go to the other end. A perfect credit score is 780.
Yeah.
Once you've hit 780, it doesn't matter if you're 800,
Hmm.
850, 7. You've winner chicken dinner. You've
780.
maxed out.
Perfect.
Um, so I hope that gives.
Yeah.
So, and you had touched on another thing, uh, pre-approval.
Yep.
A lot of people get scared
Hmm.
to get pre-approved.
Hmm.
It doesn't cost anything. It's a conversation. I want to touch on this. I only do a soft, and this is. I know there's going to be more
Yeah.
questions. I only do a soft credit check, so it
It
doesn't
doesn't affect
it
you.
doesn't hurt.
Yeah.
Uh, one of the reasons I want to do a soft credit check. So Kennedy, when you're ready to buy, if we can get your score from 720 to 740, I know the terms are going to be a little bit better.
Yeah.
So credit is something we can always work on.
Hmm.
Income is the one that like you have control
Yeah.
over, right?
Yep.
Your career, your credit is something that can always be worked on.
Mhm.
And there's ways, especially for first time home buyers like yourself, who you just said you don't have a lot of debts,
Yeah.
which is great.
Mhm.
However, without seeing your credit profile, you could have some room to improve your credit score.
Mhm.
So how do you do that? Well, you could go take out more debt, or there's ways you can self-report.
Yeah.
Rent, utilities,
Mhm.
cell phone bill,
Yeah.
right? We pay for this every month,
Mhm.
but it doesn't report
Yeah.
unless you don't pay then they put you in
Exactly.
collections.
Yeah.
So you can self-report.
Mhm.
That won't hurt your debt to income ratio.
Mhm.
It will increase your credit score.
Yeah. Let's talk about. I have a question about debt. So I'm going to give you a
Okay.
situation. Say we're going to use me as an example. Say I have a car payment
Mhm.
of 300 or $300 to $400 a month plus the insurance, blah, 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 and I come to you and want to get pre-approved. How does that debt? I don't need numbers or anything,
Okay.
but how does that debt, like, how dramatic is that effect on my pre-approval from having a car payment?
Great question. So one thing you brought up, insurance won't count against something called your debt to income. So
Okay.
I'm going to break this down. We look at something called debt to income ratios, and you have
Mhm.
two ratios.
Mhm.
The first one is just how much money you make versus how much the house is going to cost.
Yeah.
The second one is how much the house is going to cost in proportion to how much you make plus all your other debts.
Hmm.
So if you had multiple car loans, you go out, and that's why I always use the example: don't go buy a boat,
Yeah.
right? Don't go buy a
Yeah.
boat or a jet ski, or
Hmm.
wait till after you buy the house. But your debts can 100% impact what you qualify for. So if you're overextended in debts,
Hmm.
and I don't even know how many $1 trillion credit card debt the country is right now.
Oh, yeah.
We're at an
It's
all time
insane.
high.
Yeah.
So I'll see some people with no credit card debt. I'll
Hmm.
see other people with a lot,
Hmm.
and that can make or break.
Hmm.
That can make or break your pre-approval.
Yeah.
Absolutely.
So for some people that do not have, I mean, I know the answer to this, but I want you to
Hmm.
explain it or just kind of walk us through the basic steps. For somebody that does not have a lot of lines of credit or maybe has a credit card or two, what would you recommend them, like, and they want to buy a house soon? What would you recommend them do to kind of get the fastest results with their credit or the best results or whatever?
Let me ask it. I need some clarity
Yeah.
to the question. Do they have a low credit score and looking to increase
Yeah,
it?
they have a low credit score because they
Okay.
haven't had credit for long. Know, probably like a year
Hmm.
and one or two credit cards, and they're just looking to get that credit score dramatically increased so they can. I know time with credit is a big thing,
Correct.
um, but what would you recommend them take with their first steps to kind of increase that?
First step, the quickest way would be to be added on to somebody as an authorized user. So if you have a relative, a significant other who has a longer history,
Hmm.
let's say with a Home Depot credit card,
Yeah.
right? You can be added on as an authorized user. That's going to be one of the quickest ways.
Wow.
Again, back to self-reporting. It's going to be a little bit slower, but you're still going to see, hey, if you have a 6 month window of when you want to buy, 6 or 12 months, you're going to see your score go.
Hmm.
It's not going to be immediate. I have a specific example of the authorized user.
Hmm.
I had there was a mother and daughter, and the mother was co-signing. She was co-signing. She had a zero credit score. She hadn't taken out a credit card. She had nothing in her name. She had a majority of the income. She just paid cash
Yeah.
for everything for
Wow.
years. So we added her onto one of her. And her daughter had stellar credit. Like
Hmm.
I looked at it and I don't see a nothing,
Hmm.
like a blank slate on credit very often. And so we added her. It was like a 2 week wait
Hmm.
for that to cycle through, and boom, she had an 800 credit score.
Wow.
Yeah.
Wow. 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 That's amazing. And I know that I remember I was talking a few months back that like if you have had a few dings on your credit,
Mhm.
you have some kind of I forget what it is, but you have a system where like you can go fix that or something or go
So,
help that.
so we have a couple different things.
Yeah.
Number one, uh, credit repair,
Mhm.
which I'll be vulnerable.
Yeah.
I've made some a long time ago, made some mistakes, and I've hired a credit repair company,
Hmm.
cleaned it up.
Yeah.
Uh, we all have bumps in the road,
For
right?
sure.
But I have a credit simulator that I can run, and I do this all the time. So remember, I said 780
Perfect.
is
Yeah.
over 780.
Yeah.
I've worked with people who are like 772, 773, and I run the simulator. It says, hey, if you pay this credit card balance down by $300, your score is going to go up by 10 points.
Oh, that's cool.
So I get on the phone, say, hey, you're going to pay the credit card. Kennedy, you're going to pay this credit card
Yeah.
down anyway, right? If you pay it down by this exact amount,
Hmm.
and I rerun your credit,
Hmm.
and we can kind of force it through. We won't get too granular into that
Yeah.
process, but it's a pretty easy process.
Yeah.
And increase the score, get a little bit better terms, a little bit on a big loan over a long time. It's a massive savings.
Yeah. No,
So
that's incredible. Okay, last question about credit.
okay.
Say, like we were talking briefly a few minutes back about young people not
Mm.
having tons and tons of time with their lines of credit. So say they have a great credit score in the 700s, but just not 5 to 10 years of credit. Say they have 2 years of credit, but it's that high score. How does that affect it?
It's really not going to as long as if
Cool.
they're qualifying for
Yeah. So
yeah,
just that
yeah.
score.
There's some off they're called non-QM loans
Yeah.
where
Yeah.
we want to see they need to have X amount of history
Hmm.
for a primary residence if we're doing a conventional FHA or VA, and they don't have a huge history. Let's say they just got out of school.
Hmm.
I want to touch on this because I
Yeah.
don't think it's. So let's say you just got out of school a year ago. A lot of lenders they say, well, you need a 2 year work history. Did you know that school counts as work history?
I was gonna ask you about that after this. I really want you to explain this because I personally didn't know this,
Mm-hmm.
that like being in school counts as some income, right? Isn't that what you explained to Julie? It may be wrong.
It's not going to count towards income.
Okay.
But when we do a pre-approval,
Uh-huh.
someone goes to underwriting,
Yeah.
look at a 2-year history.
Okay.
We want to make sure income is consistent and continued.
Hmm.
This works very well. Let's say someone just got out of school in May,
Yeah.
right? Graduated college in May, started a job, they're getting a base salary.
Mhm.
We can use however many months ago that,
Yeah.
not many months, but we can use that their current income, say, well, what was their previous employment? It was school.
School.
We'll get some transcripts and that strings it together so that
Yeah.
you don't, if you go on the Google
Hmm.
or Chat GPT and you're asking questions, because I get this a lot.
Yeah.
People are like, "Yeah, I looked this up. I did research." I'm not telling people not to do research.
Yeah.
I love research, but when I don't have 2 years of work history, well, we're doing school.
Hmm.
Even high school counts for. So it's
Wow.
I'm not saying you have to. You can get out of high school. You can go into a job, and you can be a year into that job. You can be less,
Use
depending,
that
and
school.
use the school for
Wow.
work
That's so
history. There's
interesting.
no income.
Yeah.
But we need to see the continuation of.
My brain is going all over the place right
I
now.
love it.
Okay, so
I love
say
it.
so say we're gonna keep going off of this. Say we have that 1 year of work history, 1 year of college
Hmm.
as your work history. What about income? Are you just using the 1 year of your job that you have? You can do that with a FHA or conventional.
Correct.
Okay.
It gets a little tricky
Yeah.
with self-employed. If
Yeah.
someone's
Yeah.
self-employed or 1099, then it changes things. We
Yeah.
won't dive too
Yeah.
too
Yeah.
much into that.
Yeah.
But
W-2, you can look at 1 year
yep,
with that work history, school,
absolutely,
whatever. That's
absolutely. And
interesting.
let's say someone got out of school, they started at X amount,
Hmm.
whether it's hourly or their salary, and their salary went up. We're not using we're not using their old salary. We're
Yeah.
using their new salary, how much they're currently making.
Mhm.
So it's not like an average.
Okay.
So that's always because we see a lot of people come out of school and you
Yeah.
start working. Maybe I started out in this department and worked my way up over
Yeah.
3 months, 6 months, 12 months. So,
And when somebody does get that raise and you say that you are looking at the new income,
mhm.
how much time do you need? A full year? What
No,
time?
so
How long did
there's verifications that we do with
Yeah.
employers. There's written verifications. We typically have offer letters.
Hmm. Okay.
So we will get that from the employer or
Awesome.
from right from the pay stub. A lot of pay stubs, if
Hmm.
someone's on salary, it'll say.
So let's go back to the pre-approval process. It's extremely, extremely important for those of you listening. For me, getting to know you as a buyer, I need exactly what you're qualified for. You need to know what they're qualified for. You do all the background checks and stuff like that. Not background checks, but you do all the research, the digging, and find out what they're qualified for, and that helps us narrow down the search, blah, blah, blah. So let's talk about somebody who is wanting to get pre-approved, has no idea where to start. What what documents, what paperwork do they need? How do they, I don't want to say how do they contact you, but let's start with the documents. What do people need to have organized and give to you to get that ball rolling?
Great question. Uh, First thing I want to say, it's not that scary.
Yeah, for
It's
sure.
not a scary
Yeah,
process. I'm not asking for blood type,
yeah,
or it starts with a conversation. A
yep,
pre-approval starts with a conversation. And there's a difference between a pre-qualification and a
yep.
pre-approval. Pre-approval is, all right, we have that conversation. Kennedy, you tell me, Eric, I want to buy in 3 months or 6 months. Here's my goal.
Hmm.
I want to just verify what what I qualify for, right?
Hmm.
So depending on income, remember we talked about
Yep.
different income sources. So if someone's self-employed, we may need tax returns, bank state, 12 months of bank statements. In general, driver's license, 2 months of bank statements, W-2s, and 30 days of pay stubs. That's it's pretty basic.
Yeah.
Now, if you own multiple businesses, multiple properties. I'll use Alex again. We're working with a couple, and they have 5 properties.
Hmm.
Some are owned free and clear, some aren't. We're collecting mortgage statements, insurance, but it's not. It's really not a scary
For
process, and
sure.
that's uh, a lot of people are will talk more openly about their personal lives than they will their financial
For
lives.
sure. For
Those
sure. And
are,
I think it's kind of like an eye opener. Like if they go through with the
yeah,
pre-approval, it's nerve-wracking to see what you're actually qualified
right.
for if you're, not in a place that you want to be. But it's not scary. I've helped many people do it. It's the best too. How long does that process typically take? I know everybody's different, but how long in your experience, like what's your turnaround time?
Great question.
Yeah.
So my go-to answer is within 24 hours
Yeah.
of getting the documents, you'll have a pre-approval. And I say 24 hours because sometimes, listen, we work with people who may be working nights,
Hmm.
maybe working
For sure.
weekends. So there's times I'll get documents at 7 o'clock on a Saturday
Yeah.
when I'm off at date night with my
Hmm.
wife. Um, the reality is, let's say you wanted to buy a house today and you said, Eric, I have everything. I'm going to send it to you. And you're qualified. You're going to have a pre-approval within 60 minutes. Like
I
that,
love that. That's awesome.
so it's as fast as you want to move.
Hmm.
And that's another thing I share with all buyers.
Hmm.
I'm never going to pressure anybody until you're under contract.
Yeah.
And now you have contractual, like you have deadlines that you have to meet. So we work at your pace. If you want to say, Eric, I'm going to get it to you next month. I'm a
Yeah.
year out. Perfect. I'm going to set a reminder to follow up with you.
Hmm.
Um, but it's as fast or as slow as you want to make it
Yeah.
as a home buyer.
Yeah.
Again, you've gone through the process. You're under contract. Now there's certain deadlines that you have to
Hmm.
hit. And at that point, the goal is, hey, all we need is like it just went from October to November.
Hmm.
So I have several people closing on homes this month. Just need an updated bank statement.
Yeah.
Like that's it. And they know about it.
So I do want to say from personal experience watching you, when you go to start that process with a home buyer and you do notice some credit dings or credit
Mm-hmm.
issues, I do want to point out that you really do work with the person to try to help raise that score
Mm-hmm.
before giving that official pre-approval. Like I know with one of my friends, um, you helped her out. You told her what was wrong before you gave her that official piece of paper. So
And I could have.
yeah.
She wasn't ready. So she had the option because she could have moved forward.
Hmm.
She was qualified.
Hmm.
However, we fixed a couple things
Yeah.
and now
Made it better.
she's technically could buy more house.
Yeah, which is
Um,
awesome. I'm so happy that that happened. So buying a house, I mean, you see it, I see it all day long, and especially again with me being surrounded by people that have so many doubts about buying a house and have no hope at all. It's truly a mindset thing.
mm,
So I'm hoping that after this, like hearing some facts, hearing hope that they haven't heard before, or whatever. Um, I'm hoping that some mindsets change. If you could talk into the mind of somebody who has no hope, what would you say? What what motivation would you give them? And yeah, that's it. What motivation would you give them? What mindset shift would you tell them?
mindset is so key.
So
It
key.
is it is so key. What your mind believes you can achieve.
Yeah, for sure.
Who said that? We're gonna have to quote that. So
Yeah.
we're gonna have to drop a quote in.
Yep.
Um, a couple things. There's we have something called limiting beliefs.
Yeah.
We all have some type of limiting belief. And it can be how we were raised. It can be societal. Um, but there's a lot of us who think we can't earn X amount. We can't have this house. This is only for so and so. So there's a lot of limiting beliefs and there's a lot of outside noise. So coaching, this is what you and I are doing is we're coaching people too.
Yeah.
We're advising, but we're also coaching. How do you become a homeowner? One of the first things that I tell people, and it doesn't matter what news channel, I say, turn off the news.
Yeah.
It's negative.
Yeah.
It's
I'm the
negative.
same way.
Um, I'm not saying don't do your research.
Yeah.
I'm not saying, hey, Google me if you like, check me out, learn. But there's so much negativity out there. From an internal. Now, what can we control? We control our mindset. I always have people get a yellow sticky note, put a note on your bathroom mirror, on your refrigerator that says, "I will be a homeowner by December 31st." So,
I love
because
that.
when you see that, because again, there's so many distractions. The new iPhone comes out,
Yeah.
the new car comes out. We get distracted with life. I have three boys, soccer, and when things get in the way of your goal, it it just gets pushed. You're
Yeah.
kicking the can down the road. So visualization and manifestation
Yeah.
of I will be a homeowner. I'm so happy and grateful that I'm getting the keys to my new home April 15th, and it's important to do that. So that's something I have. I had I was talking to a guy, this is a month or two ago, and I don't know, I still haven't figured out how he does it. He's a calendar countdown on his phone
That's cool.
every day. And I think it's July. I'm gonna have to go back through my
Yeah.
notes, but July of next year is his target.
Mhm.
Every day he wakes up and he has a countdown on his calendar
Wow.
to becoming a
Yeah,
homeowner.
I
So
like
that's
that.
so again the focus.
Mhm.
In speaking with someone like myself and putting together a plan.
The plan.
The plan. Can I
Sticking
share
to
a
it. Yeah.
unbelievable win
Yeah.
from
Yeah. Yeah.
earlier? It was this summer. Uh, Younger couple. They bought in Stewart.
Mhm.
I started with them. It was just about a year. It took the whole process from the time my first conversation till they got the keys.
Mhm.
What an awesome! And I shared that with them. I said, "Put a note." And they changed. They changed the date a couple times.
Mhm.
We talked twice a month,
Yeah.
sometimes three a month, and we put together a plan. And their credit score was in the mid 500s.
Okay.
They had a lot of debt.
Mhm.
They both had moved to Stewart,
Mhm.
like Pompano, or it was in Broward.
Mhm.
Both making more money, and they put a budget together. That's another thing, knowing where your money's going.
Mhm.
So I helped them. I said, "Hey, here's a generic budget." I really didn't. I can't take too much credit, but I said, "Hey, why don't you take a look at your
Yeah.
finances?" I'm not saying don't live your life, all, but see where they paid off a ton of debt.
Yeah. No, I love
They
that.
got some money in the form of a gift.
Mhm.
They closed on their house in, I think it was June, it was
Wow.
May or June, but they did the work.
Yeah.
They did the work. Um, I would call them or they would call me anytime they had questions about their credit, and they put together a plan. And they had a credit company
Mhm.
that they were,
Helping
yeah.
or letting them help them. That's awesome. I love that you said actually look at where your money is going because it's so true. I mean, I'm at fault with this too. Sometimes people spend money on stupid things. Like my
Mm.
Amazon, forget about it. So if you actually, you know, look at where your money is going, there's so much saving that can be done. And that kind of opens up to my next question. You are personally a homeowner, you and your
Hmm.
wife. What were some things that you personally did to take those baby steps to prepare for that? What, like, I know you just mentioned a few things, but what did you do that worked for you? And what would you recommend people take from that?
First thing we did was
Yeah.
first thing that we sat down, Bridget and I sat down and said, "Hey, like, we are, she's self-employed, our income kind
Yeah.
of varies." We talked about in the budget, we talked about our lifestyle. Again, three boys. travel soccer, um, where we talked about our comfort and we talked about our up to.
Yeah.
Like this is where we're comfortable. This is where we can go up to.
Hmm.
And then we definitely dialed in. You said Amazon. Yeah, it's too easy.
Yeah, no,
It's
it's too
it's
easy.
too easy.
Oh
And
my God.
I personally, I'll share how I budget myself.
Yeah.
I take out. I'm not going to share the exact number, but
Yeah,
I
no, no.
take out X amount of dollars in cash, and that's what I budget for myself for
I like that.
just going to the gas station,
Yeah.
get an energy drink.
Yeah.
That's my vice.
So you like you're a
So
cash guy.
I do. That's how I personally budget myself.
Yeah.
And there's something about spending actual cash
Yeah.
as a card's so easy,
So
right?
easy.
So
Too
easy.
easy.
Amazon, send it to me.
Yeah. Gosh, you
But
can see what you have left. Like it's hard money. You kind of feel a little worse about spending
you're
it when
like,
you do.
you're like,
Yeah. I totally get that.
and it's also for me, it's a visual, very visual.
Yeah.
So I open up my wallet. All right,
This is what I have left.
and also my goal is to
Yeah.
so it's I kind of make it like
Hmm.
a little bit of a game, but it was so important for Bridget and I to know. All right, what are we comfortable with? What are we comfortable going up to?
Yeah.
Right? Because if you ask somebody, what's a comfortable payment? Free, right?
Right.
We all
Yeah.
want. Yeah, I don't want to pay. I don't want to pay anything, but in reality,
Hmm.
and then it came down to saving. Something I share with everybody. My goal is not to say how much money do you have,
Yeah.
and then say, all right, we need every single penny, right?
Yeah.
Because when you move into a new house, you're going to want to paint, get some appliances, right?
Yeah.
Get a couple, and having reserves is really, really, really important.
Hmm.
Just having a little bit of a safety net.
Yeah, for sure.
And some people buy a house, and I've seen it a lot of times, and they don't have reserves.
Yeah.
But my goal is, over the next 6 months, okay, let's focus on, and I love checking in with people
Yeah.
after.
Hmm.
Has anything changed? Has anything? How are you doing with savings? How's your budget look? I don't get that intrusive all the time,
Yeah.
but I do set up a plan with them. We have
Yeah.
annual calls.
Well, I think that really shows how much you care. And that's what I want to give you an opportunity to kind of share how you differ from other lenders. And we don't need to talk about like other lenders around here necessarily, but I want you really do stand out to us. You are our favorite. And I want you to share how you really build relationships with these people. Like you genuinely do care. I want to give you a moment to kind of let the light shine on you and share.
Thank you.
Of
I
course.
really appreciate the kind
Yeah.
words. So it our company motto
Yeah,
is relationships over
for
transactions.
sure.
Um, doing a mortgage, I'm gonna it, doing the actual mortgage
Mhm.
is the easiest part.
Mhm.
It it really is.
Mhm.
When you like collecting documents, I mean, I could be a robot,
Mhm.
right? Just say, hey, send me this, this,
Yeah.
this, and this. It comes down to, listen, we're working with people.
Mhm.
We're working. This is an emotional purchase.
Yep.
So discernment is and empathy.
Mhm.
Uh, we hear a lot of stuff about AI, right? And
Yeah.
AI like he can do some great stuff, and it's
Mhm.
taken some of the things off my plate,
Mhm.
which has enabled me to spend time here with you,
Yeah.
on the phone with people,
Mhm.
um, really coming through with an empathetic and educational,
Mhm.
because knowing this brings me way back. Telling isn't selling, right? And at the end of the day, we're all kind of in sales.
Mhm.
Sales is defined as serving people with solutions.
Mhm.
And what I like to do is uncover that the unseen value in home ownership, because it's really easy for you and I to tell somebody, listen, you can either pay your mortgage or you're paying your like those are words. But
Yeah.
when I can educate and get somebody in person or on a Zoom,
Mhm.
show them what appreciation looks like
Mhm.
long term, how this is going to impact their lives, um, and really give them the tools to make, not tell them what the best decision is, but show them all their options. And yes, there's some advisory that goes into it.
Yeah.
And then I get a lot of people to say, "Hey, Eric," and I'll tell them, "Listen, if you were my brother or sister, this is what I would, 1,000% recommend."
Yeah.
But that's the education, empathetic education
Yeah.
is where I tend to excel.
Yeah, for sure. I think that's, I mean, the most important with the biggest purchase of somebody's life. It really is. You know, these transactions get stressful, people's emotions get heightened, and I mean, we go through it as well. And the only thing that you can be is a human to them and just understand what they're going through, try to take some stress off of them. Well, we take some stress off them, um, and just have empathy, have kindness, and be a human, be a good person.
Yeah, and
Like really,
I share this a lot too because like my personal story of my like it's important. I've gone through it. I've
yeah,
gone through it a bunch of times, and recently, again, you and I were immersed in real estate.
yeah,
I do this literally 7 days a week. I try
mhm,
not to do Sunday,
yeah.
but
Try.
there's an hour or two,
Yeah.
so we'll call it 6 days a week. I was still nervous. Bridget wasn't nervous at all. She's like, Eric, you got this. But there was doubts.
Yeah.
I had doubts. I I saw the numbers. I knew I was buying the right house in the right area
Yeah.
for the right price, but then I still had doubts. Is this the wrong time?
Yeah.
Is it going to appraise? Um, so our goal, one of my main goals, is to not. I can't say eliminate stress.
Mhm.
It's impossible. It's
Yep.
impossible by
Yep.
like unless you're Elon Musk. Hey,
Exactly.
Elon, and you just have all the money. It
Yeah.
doesn't matter. But yeah, it's our goal is to eliminate as much as
As
possible,
much as possible. For
and
sure.
then let's renting is stressful.
It is.
Owning a home can be stressful too.
Yeah.
I've had to replace uh, just recently one of the downsides. Like you can't call. I can call my landlord and say, "Hey,
Can you fix
can you
this?
change the garbage disposal?"
Yeah.
But I changed the garbage disposal.
Uh-huh.
And at the end of the day, I keep looking. All right, look at my equity. Look at the equity.
Yeah, for
Look
sure.
at the tax savings.
Mhm.
There's a multitude of financial advantages.
Yeah.
Plus, there's the let's be honest, it's the American dream,
Yeah.
right?
Yep. It is. Yep.
It's part of the American dream
It
anyway.
is for sure.
And there's not in a seven deadly sin terminology of the pride, but
Yeah.
it's there's pride involved when you own a home. It's pretty awesome.
I do, talking about the American dream in my specific situation, I'm so motivated to buy my first house because I look at the prices of rent around here and I literally like refuse to rent because
Mm.
it's more expensive than what my personal like down payment and like I know my situation, and my mortgage payment would be less than the rent in Jupiter, Florida. And that is, rent, the rent prices are sad
Mhm.
for people my age nowadays because that is what is giving people a hard time to afford life. I mean, I can't imagine paying, almost 4 grand for a normal place to live. Like that's just insane. So if you, call up Eric and you talk about, the steps to getting your ducks in a row to buy a house, I promise you that that mortgage payment would be less than 4 grand a month for an average, like your normal home. We're not talking about a multi-million dollar house here. We're talking about your normal single family or townhouse, whatever, average. But that's what those rent prices are for. You know what I mean? Like it's,
And I'll speak because I'm a just a couple of years older than you,
yeah.
so I'm 47. So if I had to do it all over again,
Yeah.
I wish someone would tell me, Eric, look at your for now, not your forever.
Yeah.
It's your for now.
Mhm.
And I wish I had been told how to house hack.
Yeah.
And what I mean by house hack is, again, my for now house. It's in my early 20s. I would want to get something,
Yeah.
right?
Yep.
Get something, live in it for a year or 2 years
Mhm.
as my primary,
Yeah.
buy something else. Now I'm going to keep that. I'm going to retain that.
Yeah.
Buy something else a year or two later. And you can do this with multifamilies too. Like that's the ultimate house hack. But if I was in my early 20s and could do it all over again, house hack every year or two, like legally, it's you have to live there for a year
Okay.
because now you're buying houses as if the primary residence is 100% legal. I'm not
Mhm.
saying do not do anything illegal.
Yeah.
Um, and now by the time you're 35, 40, 47,
Mhm.
you have 10 properties,
Yeah.
even two or three properties.
Mm.
Now you have, now you're now you're looking at the long term
Yeah.
retirement,
Yeah.
multiple properties. Listen, you can sell it. It's going to go up and someone else is paying for it.
Yeah.
But from a dollar cost standpoint, that is the most
Mm.
efficient and effective way to build a real estate portfolio.
For sure.
Because if I go out right now and I say, hey, I want to buy an investment property,
Mhm.
20% down, because now you're talking
Yeah.
20% down, 25% down if
Mhm.
it's a duplex or in a higher interest rate. So you're making less money. But again, if I could go back in time, if I could give myself one financial thing, I would say buy. It doesn't have to be the Taj Mahal.
Yeah.
It's the for now.
Yeah.
With some tell it like something that's going to be rentable
Yeah. Yeah.
down in the future. But
Yeah.
that house hacking is the way to
Mhm. And we have to wrap this up soon, but I do want to ask you when you talk about the house hacking, what kind of loan? I hear people talk about taking out home equity loans
go. Mhm.
to buy, buy a house, home equity loan, buy their next house, blah, blah, blah. Is that what you are talking about, or would you go explain to us
So
that
a
process?
home equity loan or line of credit, there's a
Yeah.
few different ones out there. That is one tool that you can, once you get to that point, you can utilize. That's just a tool
Yeah.
um, to do it.
Hmm.
So there's a few different ways to get that equity if you need to get equity out of that house to buy the next one.
Hmm.
Um, I don't want to overcomplicate it
Yeah.
because it's just the thought process is if you're younger and you're looking at your financial goals for the future, financial freedom,
Yeah.
right? And that's what being able to buy back some of your time so you can do things you love, spend time with your family.
Hmm.
Once you get to my age, you'll say you have a family and kids,
Yeah.
and you're out soccer field or whatever sport doing stuff
Hmm.
like that, and being able to again, if I could go back, if I had 5 properties or 10 properties, if I
Yeah.
had started earlier.
Yeah.
So a takeaway is don't make the mistakes I did. Don't make the mistakes I did.
Oh gosh.
And I'm not telling people to rush and do something if they're not prepared,
Yeah.
which is the whole point of this
For
podcast, right?
sure.
Right? How do you get prepared
Exactly.
for the best plan? And that's not for everybody. Not
Yeah.
everybody wants to have
For sure.
5 or 10
Mhm.
properties.
But for somebody like both of us,
Mm.
if you're self-employed, if you just want passive income on top of your regular job, definitely listen to what Eric just said. Do the house hacking and, work towards buying your first home as soon as possible. But I think that we learned so much today. I'm
Thank you so much.
hoping that, a bunch of people that are around me constantly saying these things listen to this. I hope they learned something. Eric, do you want to tell people how to contact you if they are, getting into this process? What's the best way to contact you? I'll put your contact
Yeah.
information.
So
Like,
My number's right on Google.
Perfect.
Eric
Eric
Rosberg.
Rosberg,
Google
Google
me.
page. Well,
Uh,
thank you so much for coming. You did amazing. This was so fun. And if anybody has any questions after listening to this, contact Eric off Google, or you can contact myself and I can share Eric's contact.
Absolutely. Thank you
Okay.
so much.
Thank you
This is
so
awesome.
much.